But let's talk about whether or not the big banks are going to set a good tone for the rest of the industry and the market in the coming days.
Thank you, Don. And I think they will set a good tone. As you pointed out, we expect a number of the big banks to be reporting fourth quarter results later this morning. And those results are going to be driven by a couple of factors. First and foremost, of course, will be credit quality. As you know, the economy has recovered very nicely from the depths of the downturn in the second quarter. And the banks, I think, are going to show that the credit picture has actually improved quite a bit. Second, because these banks all have capital markets activities, I think you're going to see very strong capital market results relative to fourth quarter of last year. Now, seasonally, third quarter is stronger than fourth quarter, so I can see sequentially the numbers being lower. But year over year, I think the fourth quarter capital market numbers will be very strong. And then lastly, and you touched on it, I think interest rates. The yield curve is starting to steepen, so I think we're going to get some positive news on the direction of the net interest margin in 2021 because of the steepening of the yield curve.
Now, the interest rate picture from a macro perspective is a huge part of that bank story. Is there anything specific to these companies, either on the money center side of things, the regional side of things? Are there reserves that need to be watched for? What exactly will be the big theme for these banks, not just this quarter, but for the better part of 2021, if the economic trajectory continues on that modest upside?
There are two very important themes for investors to keep focused on for 2021. And it's premised, of course, on the economy, as you just pointed out, being strong in 2021. Let's assume that the vaccinations are available to everybody by the middle of the year. Under that scenario, the number one line item that everyone should focus on is, again, credit quality. I think we're going to find loan loss reserve releasing throughout 21. We may even see negative loan loss provisions, very similar done to what we saw after the financial crisis. Second, as you've seen this year, and you pointed out, the stocks have been gangbusters since the start of the year, and it's due to that 10-year government bond yield moving up the way it has. And if we're sitting here a year from now and the 10-year government bond yield is 175 basis points, that steepening in the curve will be favorable, will impact favorably the bank's net interest margins even further, which will help their profitability.
So should bank investors, Gerard, be more focused on yield curve sensitive banks or more capital markets activity sensitive banks? Are there certain parts of the market and certain banks in particular that catch your attention on the positive side more than others?
I think there are, and those banks include, for example, Bank of America. And it's due to what you just pointed out, which is asset sensitivity. These banks will see the benefit more so in the steepening of the curve. A few of the regional banks, I think, will also benefit. Names like KeyCorp and Fifth Third, Regions Financial. And all of these companies, you might recall, crashed during the financial crisis. And they had indicated post-financial crisis that they de-risked their balance sheets. So not only do you get the earnings recovery in a J.P. Morgan, which is, of course, a stalwart, or a U.S. Bancorp, which is another strong company, these other companies, I think, we're going to get valuation improvement as investors discover that they didn't have to cut their dividends. There was no depreciation in capital, unlike what we saw in 2008 and 2009. And I'd put Citigroup in that camp as well.
All right. Now, we've only got about 20, 30 seconds left here, Gerard. Over the last decade, every time we speak, I need to talk about distress in banks because that's how, in many ways, a lot of investors know you, from the Texas ratio and everything else. What's the biggest hurdle for banks in 2021?
I would say the biggest hurdle is fiscal policy out of Washington, D.C. that raises taxes too aggressively and slows down the economic recovery. I think that's the biggest potential hurdle for the banks in the upcoming year.
Shepard Smith here. Thanks for watching CNBC on YouTube.